Hello everyone! Welcome to Electrifying Economics. I'm Manisha, and in today's video we're going to be talking about money and banking. But I know I need to tell you something before I start. I am so sorry. I've been so inactive. I know, and I'm not sorry, but I'm sorry that I've been inactive. I feel bad that I wasn't doing videos, but life has been so stressful. I cannot explain the amount of stress life has given me, but I am back for this video. I'm not gonna say I'm officially back in terms of continuing to do videos, but I am back for now. Like, I'm gonna make one video and probably another video after a long time, but I'm not quitting Electrifying Economics. That is not gonna happen. I love making these videos, and I have some comments which were so cute. They were so heart-touching, and that kind of motivated me to make some videos. So I'll think about if I should just put a screenshot on the screen right now, but I'll think about it. I'm not sure. I might actually. But I am back for this video, and I'm so excited. So, without any further ado, let's get into the video. So, as I told, I'm very excited for this, and the topic for today is money and banking. So, without any further ado, let's get started. I missed doing this so much. I'm not gonna lie, I actually missed doing this, but I'm back for this video, and I'm very excited to do this. I hope the video turns out to be perfect. So, today we're doing money and banking, and let's get started. So what is money? That's a very fundamental question. What is money to you? Pause the video and write a comment down below of what is money to you. But money essentially is anything that is generally accepted as a means of payment to exchange goods and services. Anything you pay, I give you my mouse and you give me your mouse. I don't know, just saying. But yeah, anything that is generally accepted in terms of payment to exchange goods and services. So that's like money in general. If I pay you money, you're gonna give me something if you want to give me something, right? So that's the idea. So the history behind the whole money system is very interesting, and I enjoyed learning this part. It was very intriguing. Well, at least at that time I didn't know about it, but now I do. I don't know if every one of you watching this video knows about it right now, but it's okay even if you know. It is something interesting which I did learn in my school when I was in IGCSE, but now I just want to convey that knowledge here. So people didn't used to use money like actual notes and coins to trade goods and services, but in olden days they used to give like actual goods in exchange for other goods or services. Like in this image, I took it from Google. Like there's a little link there. Yeah, I took it from Google, and so you see the person who has rice is searching for something, rice, and this guy has chicken, so he's wanting that. And then there's like another example where this guy has cow and she has apples or cherries. So yeah, that's how the trading used to happen. There was no actual physical notes and coins, because if you think about it, notes and coins are just paper and some metal. So it's like they don't actually have that value. Like a piece of paper has a value of $1,000 or something. That's just a very weird idea, but because of central banks and the trust the central banks have been given, and the trust this whole system has been given, it is working, and it is working at this world currently that we're living in. And the act of trading goods and services without the use of money is called the barter system. And yeah, that's what they used to do in the olden days. And what are the types of money? So there is commodity. These can be used as money. A lot of times, many jewels gold, silver, and other precious metals were used to trade. And this was another thing that was done in olden days. And this is mainly because these jewelry and gold, silver, diamond, all of these are scarce resources. You know, they actually have value compared to like paper. But yeah, these were used because these resources are very precious and scarce. And that's one of the ways. Commodity. Fiat is all modern money systems like notes and coins. The value of fiat money is determined by the trust that we put in central banks, like I told before. And the market forces of demand and supply determine the value of money. If we don't put value into a piece of paper in terms of $1,000 something, or I don't know, 100 baht, 10 baht, 50 rupees, 100 pounds, whatever. If we don't put that value, if we don't actually trust it, then like it doesn't matter. It's just a piece of paper. Like if you think about it, if I go and give a little child, newborn baby, or like a little toddler a piece of paper, like a toddler who can't even talk or understand things properly, he or she is just going to eat it or just rip it and just play with it. Yeah, I mean, they don't know what it is. They don't have any value for it. Like they don't have any understanding of the value for it. Yeah, that's just the example I gave. I just felt like giving it because I've heard it from my people I know. And that was a very interesting idea that I just loved. And I'm just conveying the knowledge that I got to you guys in this channel. Fiduciary money is basically the trust that is put into the whole banking system. Like every single economy trusts their central bank, trusts their notes and coins, trusts their values, and trusts the exchange rate. There we go. Trust is very important in money. What are the functions of money? So money acts as a medium of exchange. So again, as I told, you need to give money to get something. Nothing is for free, right? You need to give something to get something, and money acts as a medium of exchange in terms of exchanging goods and services. And money also gives a measure of value in terms of money allows different goods and services to be measured and weighed in terms of which is more expensive, which is more precious, which is more valuable than something else. Like I have this random keychain over here, and I have my GDC, my calculator. Which one is more valuable? Of course, GDC is more valuable than this. I mean, in terms of monetary thing, like this is like much more expensive than the piece of keychain. I mean, I love this keychain, not telling that both of these are valuable to me, but in terms of monetary value, we see this GDC will be more expensive, more valuable than a keychain, which is just a few bucks. Yeah, that's an example. So money allows us to compare the value and the preciousness of different goods and services, and that's very useful in terms of businesses. Like, you know, in general, if you're going to go buy something and you see the value of one thing is less than the other, then you'll think about buying probably the cheaper one. I mean, if it's the same good or service, but if it's different, it depends upon your needs and wants, of course. Another function of money is standard of deferred payment. So this is basically the idea that money borrowed today can be paid back at a later date. That's again because of the trust. Because think about it. I mean, this is what happens in real life. I don't know, my parents, I don't take loans yet. Probably take in the future. But yeah, my parents, your parents, anyone's parents, or anyone who's earning or who wants a house usually takes a loan from from commercial banks, and they take the loan, and I don't know, there's a scheme, 10-year, 50-year, 20-year, I don't know, there's a scheme, and you have to keep paying back the money, and you don't have to pay it back that day or that month. Like, depends upon the fixed kind of time period that has been set. And store of value is the last function of money. Basically, money can be stored as wealth. So wealth is not the same as money. Wealth is basically like, for example, houses, buildings, palaces, iPhone, diamond, iPad, laptops. I don't know other examples. I can't think of any other. Oh, land. Yeah, land is a very big wealth. Yeah. So money can be stored in the form of wealth. Money does not go old and is accepted by everyone and anyone. So if suddenly someone wants to sell their home one day, then it will be accepted if they like that home, if it's a good quality home, and if they can pay, then it will be accepted, and they will get money back in return because the value of money doesn't change. So what are the characteristics of money? Money is acceptable. It is accepted by everyone. Again, trust. I've been telling trust for so long, but yeah, it is what it is. It's divisible in terms of money, can be divided like 20 rupees, 20 baht, $30, $50, 60, 100, 1,000, 10,000, million, 100 million, 1,000 million. So it can be divided into small parts, and that's useful. And scarce, money is scarce, and that is the most important. Money needs to be scarce, because if it's not scarce, then you'll have no value for money. Only if the money is scarce will the system work. Scarcity and the trust really is required. Yeah, I mean, that's my analysis. So money is also durable. It stays. The value is stable. Yeah, money is recognizable. Stability of supply. It is stable in supply. Stability of demand. It is stable in demand. Everyone demands money, and the money is always supplied, but there are other different exceptional cases. The supply of money is lacking, but that's different scenarios. I'm not going to be talking about that in this video. But yeah, uniformity. Money is uniform in terms of the value. It stays the same. Okay. Let's move on to banks, because if we're talking about money, we need to talk about banks, because let's get this straight. Banks are who give us money. They are the ones who print money. They are the ones who give us loans, let us save everything. So because of the banks, we are having money today. Well, that's one of the main agents, I suppose. So there are two types of banks: central banks and commercial banks. Central banks are very, 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 very important, because they are like the parent bank. They are the banker to the government. They're responsible for providing the economy with money and controlling an economy's money supply. Central banks are the ones who print money. Remember it this way, that central banks are the parents because they're central. Just remember that. And they print money. They literally print money, and they're super important, because without central banks, commercial banks wouldn't survive. Commercial banks are like child bank. Well, there are a lot of children for a central bank, because in an economy, there's only one central bank. Central bank is an economy's bank. It's like a national bank. Like, there's the Federal Reserve in the US. There is Bank of England. There is Bank of India. Any other country you go, I mean, there is only one central bank. But commercial banks, there are millions of commercial banks, because like commercial banks are those that we give money, like we give and borrow and save money, like very, I don't know if I should give you examples. Okay, I live in Thailand. One of the banks that I know is SCB. Another bank from India is like the Axis Bank. There we go. But yeah, commercial banks are the small banks. I say small, but they're pretty big. But like the banks that individual consumers, producers go to borrow and save money. They are the ones who deal with the people in the economy, and they are financial institutions that provide individuals and businesses a place to save and borrow money. So yeah, central, they're central. So they're the parent and they print money. Remember that. And commercial banks are financial institutions who we, like I will If I earn money, I don't. But I will go to a commercial bank to get money. But I cannot go to a central bank to borrow or save money. The government goes to the central bank because it's a government's bank as well. That's one of the main functions of central bank. So functions of central bank, they have a lot of functions that they have to carry. CEB is central bank and COM is commercial bank for this video. It's in terms of for this video. Like, I just created it because it was very time consuming to write central bank, commercial bank again and again. But yeah, so first main role of central bank is to print money and maintain the money supply in the economy. If they don't print money, we don't get money. So central banks print money for an economy. And they don't keep printing money. They can't do that. It's not allowed. They print accordingly. And yeah, they print accordingly. They can't just keep printing money forever and ever. No, it doesn't work that way. So another function of central bank is they carry out monetary policy. Ooh, what is monetary policy? If you're using this video for revision, then you probably know. But if not, then I will give you an insight to what monetary policy is, but I will not use this video as a full explanation because it's not microeconomics, but it's used in microeconomics, yes, but it's a macroeconomic thing. It's weird. I mean, I have this textbook and I'm just this IGCSE textbook, and I'm just following the structure of whatever I've been learned first, and that's what I'm doing. So here we am. That's how I am going through the videos, I suppose, of mine. Anyway, so monetary policy is basically, it's done by central banks. Governments don't carry out monetary policy. So it involves changing the interest rates, base rates. Interest rates are a cost for borrowing but are reward for saving. And monetary policy is carried out by the central bank because they set a base rate, which is basically a set interest rate for the economy. So if the base rate is 2%, then if I save in the bank, then I'll get 2% interest out of it. And if I borrow from the bank, then I have to give them 2% interest. It's just an example. Monetary policy is a little vast, and I'm not going to talk about the entire thing because it's not this video, it's macroeconomics. Whenever we reach there, I will put a video on there. Okay, they maintain the money supply and monetary policy. And monetary policy, the idea of monetary policy is again to maintain a stable money supply in the economy. And to do that, there are different methods, which I'm not going to talk about, but one that is talked about in this textbook of mine and that I was learned about, which is quite important, is quantitative easing. And quantitative easing sounds interesting. It's basically when central banks buys bonds and other financial assets in order to inject money in the economy. Just think of it as central bank doing something to give money to the people or the economy. It's just a way of thinking. Yeah. But yeah, the details of it will be whenever I do a monetary supply video. But it's not done always. Quantitative easing is not that common, and it shouldn't be done unless and until it's a very, very tragic moment. When the economy really needs it, it's done. But otherwise, central banks don't usually carry out quantitative easing. They have other tools in their hands to maintain the money supply. That again, I'll not talk about this. I'll not talk about that in this video. And central bank also acts as a banker to the government. So the revenue raised by the government, like for example, by using taxes, is saved or kept in the bank, and government uses that. And also central banks also issue short-term and long-term loans or debts to the government so that they have enough funds to carry out their policies. And central banks are also banker to commercial banks because they are the parents and they give the money to their children. Oh, that's such a cute way of thinking about it. So central banks regulates the commercial banks. They set the base rate, and they also set the cash reserve that they have to keep in the bank, the percentage of cash reserve that they have to keep in the bank. So if the cash reserve is like 20% of whatever is saved in the bank by one person, needs to be kept, and the rest 80% can be given out in terms of can be given out by commercial banks to other businesses or individuals if they want to borrow and take loans. The idea is to keep at least enough money so that if the person returns back, the person who has saved returns back, then they at least get some money. That's the idea, but the details of it is not in IGCSE. It is done in IB. So yeah, wait for IB if you're going to do economics, and it's very interesting. I'm not sure if I was able to explain clearly what percentage of cash reserve really means, but I hope you guys understood. If not, just write a comment down below and I'll try to explain better. And central bank also acts as a lender of last resort. This is basically the idea that central banks gives loans to commercial banks, as I told before. And if in reality commercial banks don't have enough money, and that's what someone has heard, one person said rumors spread pretty quickly. If it's a rumor or reality, I don't know, it's an example. Basically central banks then I think we'll carry out quantitative easing because literally there's no money in the economy. So yeah, and that's how central banks are the parents. So they kind of are like the back shield, the back support, the skeleton of this whole banking system, and they help in tragic times like that as well. And central banks, one important point to say in your exam, in your essay, anywhere if it's asked, is that they are independent of political interference and government. So government has no say over central banks, and that's usually all economies, but there are some exceptional economies where central banks are still under the control of government, but they have failed to carry out their monetary policies very well. But that is a different topic. But central banks usually in most economies are very independent of the government and political interference. This is so that politics doesn't interfere and it doesn't like hinder the system in terms of if there's too much money supply, let's say, and there's a lot of inflation going on. The idea of monetary policy and what central banks should ideally do is raise interest rates, because if you raise interest rates, the incentive to spend decreases because borrowing will be more expensive. Think about this carefully. Borrowing will be more expensive and you will not borrow more because you have to pay back more later. So you will save more because you'll get more money if you save, because you get interest from saving, right? So if the interest rates increases, then the theory is that the people in the economy save more, so the inflation reduces. But yeah, that's again macroeconomics. I'm bringing a little bit of macro here so that you try to understand. It makes more sense. But yeah, and also central banks manage exchange rates. Central banks intervenes in the foreign exchange market to set the value of currency, like every single central bank of the economy. I don't really know the exact system, and I don't think you need to know about at this level in this video, because there is a topic in the end in IGCSE about appreciation, depreciation, and stuff like that. I'm gonna be honest, I wasn't that great at it. I didn't understand it clearly, but I should be able to understand whenever that topic comes up in school. It has not come up yet, but yeah, by that time, whenever I make the video, I'll try and make sure that I understand it before making the video for sure, because I don't want to give wrong information. So yeah, they manage exchange rates. So basically central banks are the ones who kind of determine the exchange rate for each and every country, each and every single country. Yeah. And the importance of central bank to different economic agents is that I think I've covered this in the previous slide. Let's just recap. So central banks put the base rate, so it influences interest rates, and it therefore influences borrowing and spending. And that's very important, as I told before in that example. And they're also bankers to the government. It's important that the government has enough money in their hand to be able to to be able to carry out the policies that is required for the economy. And that's very important. And functions of commercial banks, they provide a place for individuals to save money. Remember, commercial banks are just think of it as small banks. It's much easier to think like that. So commercial banks, remember, are the child bank, and we individuals go to commercial banks to borrow and save money. Businesses also go to commercial banks to borrow and save money. They cannot go to the central banks. And so yeah, central banks provide a place for individuals and businesses to save money and borrow money. Therefore, investment also happens because businesses are able to borrow money. So guys, that is it for today's video, and I am so happy to be able to film this video, and I will really try my best to edit as quickly as possible so that I can post it and get another video out there. And I am so grateful for your support and still sticking around with me. Thank you so much. And it is my dream, one of my dreams, not my biggest, but one of my pretty big dreams. I would love to continue this channel and just be a very good help for you guys and spread my love for economics to you all. And I really love economics. Yes, it does get hard from time to time, but that's okay. So what if it gets hard? I still try by God's grace, and I am still doing economics, and I love my economics. And thank you so much for your support. And please stick around with me, support me, share my video, share my content, comment down below. I love your comments. Your comments are amazing. I just love reading your comments. But yeah, let's finish this video here. I'm looking forward to posting this video, having boosted likes, please, and subscribers, and also shares. And tag me on your Instagram. I would love. Tag me Electrifying Economics and Love Learn. I do not mind either or both. I would love both. Love_learn50, and Electrifying Economics is electrifying_economics. Do not forget to follow me there. Yeah, if you like this video, like my content, please do not forget to like this video, share this video with your friends and family. Thank you. And also, do not forget to subscribe to my channel. Hit that bell icon right next to it so you will be notified whenever I post a new video. And let's end up this video here. And thank you so much. Until I see you next time, happy economics and enjoy your life. I am very much looking forward to interact with you guys. And thank you so much for your support. Bye.